I think there are 4 reasons why individual, unguided investors should not go it alone in the stock market. Just like people shouldn't cut their own hair or do major house renovations themselves, they should not invest without the help of some expertise. Okay, point number 1 is that markets are against you. Now, what do I mean by that? It's the nature of our dynamic Darwinian form of capitalism that today's winners turn into tomorrow's losers to make ground for or make way for the future winners. Now, if you've invested in that winner, you're going to lose over time, and the statistics bear this out. So I think it's 18.5% of stocks lose more than 75% of their wealth or their value over time. I think it's about 40% of stocks don't offer a positive return at any duration. Investing in stocks is inherently dangerous. There's a lot of urban myth around investing in stocks. My favorite or least favorite, depending on your perspective, is that stocks will return an average of 8% over time. That's based on the performance of the US stock market during its economic golden age. And to infer that stocks are always going to do that is really naive and dangerous. It's called sampling bias and survivorship bias. The other point I want to make about the dangers of investing in stocks, even if they do give you 8% on average over the long term, they can go for a decade or more of offering flat or no returns. The period from 1966 to 1980, for example, was terrible for stock investors. And in the life of a person who's trying to save for some goal like education or retirement or to buy a home, that's devastating. So the idea that stocks are always going to do well for you is naive and dangerous. Point number 2 is that your physiology is against you. Now, what do I mean by that? There's a lot of research that talks about the many and varied problems that individuals have when it comes to investing in stocks or anything else. There's something in our physiology that causes us to hang on to losers and sell winners. It causes us to be overconfident, causes us to herd with other investors, which is dangerous. You can learn more about this, by the way, on the documentary, my own behavioral finance documentary on this page. In a nutshell, there's something in our physiology that makes us bad investors. And I want to make the point that when I say you're a bad investor, or people are bad investors, I mean people. I mean all of us suffer these problems. It's not like I'm immune to it. I don't want to come off like I'm holier than thou. It's just we need to be aware of the fact that we have physiological biases that cause us to make a mess of it when we invest for ourselves. The third problem that the individual unguided investor faces is that the house is against them much of the time. The trading behavior of individual investors acts as a wealth transfer from the individual to big institutions like big government or big brokerage houses. So wealth transfer comes in a few different ways. It comes from taxes in the form of capital gains tax. Governments are at least uncaring and perhaps complicit in this activity by not helping people understand what they're doing a little bit better. That could be a rule government should take on. That's a debate for another day. We also pay commissions, not just commissions that we know about, but also costs in the form of the bid-ask spread. We also tend to buy high and sell low, and that acts as a huge transfer of wealth between the individual unguided investor and the brokerage houses that are doing the buying or the selling from us. So the fourth and perhaps most dangerous reason why individual and unguided investors shouldn't invest in the stock market is because they don't really have clear understanding of what their goals are. Another way of saying this is that a great way to miss your target is to not have one. Obviously they have goals like funding retirement or funding education and so on, but oftentimes they don't know what's necessary to achieve those goals. So to use retirement as an example, you're told to invest in stocks in order to reach some amount of money to be able to fund a future retirement. It's really, really complicated to know how much you're going to need in retirement. You don't know how much the government's going to kick in, and your life really determines how much you're going to need. I mean, do you need to live in Manhattan, or can you afford to live in Scranton? Are you comfortable living there? Do you need 3 vacations a year, or are you comfortable with 1 vacation every 2 years? Do you have big family commitments, or do you have sort of a spider's attitude about the health and well-being of the next generation? There's a lot of variables that go into this, Plus, there are medical issues that you may or may not face in retirement. So the idea that you invest a lot of money today in stocks from which you will draw some unknown amount of money in the future, it's just, there are too many unknown variables in that. And so I think naive and unguided investors, first, before they actually invest in stocks, should sit down with some kind of expert to help them plan out what their retirement life, for example, is going to look like, and sort of get a thumbnail idea then of how much money they need to achieve. And it may very well be that if you're Canadian, GICs, and if you're American, CDs can get you to where you need to go. Now, on the other hand, it could very well be that you don't need an expert's advice. It could be that if you're living below your means and you're living comfortably, or you're comfortably currently in retirement, for example, and you're doing just fine without an expert, then good for you, and keep doing what you're doing. Before signing off, I have a favor to ask of you. I'm curious about retirement specifically, so your retirement. What does it look like? Have you started planning for it? How are you thinking about it? How comfortable are you with the idea of it? If you're in retirement, I'd particularly like to hear from you. Did you plan for it before you retired? And were those plans that you made adequate? Were they up to the task? I'd be really curious to hear about that in comments, because that's going to be the basis for future content that I'm going to put out. So that about does her. Wraps her all up. Thank you very much as usual for watching, and I look forward to seeing you next time.